We're living in a tale of two markets. On one end, luxury homes over 2.5 million are moving beautifully. Wealth is flowing into Calgary from across the country and beyond. On the other end, anything detached, priced under $750,000 in a solid neighborhood with great presentation is also selling fast. But apartments and townhouses are a different story. And here's the catch. If your pricing is off or your home isn't showing at its best, you're sitting. And in April, we saw exactly that play out across the city. Before we dig into the numbers, a quick reminder. We are in the prime selling window for detached homes in Calgary. Historically, spring and early summer, which is right now through mid-July, is when buyer activity peaks. When Stampede rolls around and we hit that July 15th mark, people shift their focus to outdoor activities, camping, and summer plans. That being said, homes sell all throughout the year, and if strategy goes out the window, we'll obviously always work around your timing. But if we're being the most strategic, then the spring and early summer season is the best time to list. All right, now let's talk numbers. According to the Calgary Real Estate Board, April saw just over 2,100 sales across the city. That's down about 6% year over year. New listings came in at just over 3,800, also down about 5% from last April. Inventory sits at just under 6,000 units, up 2% from last year, and our months of supply is sitting at just under 3 months at 2.84 months, which is technically putting us in balanced territory. But here's where the headline numbers don't tell the full story. Balance doesn't mean equal opportunity across every segment. Let's break it down by property type. Detached homes are still the strongest performer. Sales were essentially flat year over year, just under 1,100 sales in April. Inventory is around 2,500 units, down slightly from last year, and months of supply remains at just over 2 months, which is tight. The benchmark price for detached homes is $745,400, down 2.7% year over year. So yes, prices are softer than they were a year ago, but the rate of declines is slowing. In some districts like the West, Northwest, and South, we're actually seeing sellers market conditions with under 2 months of supply. Meanwhile, the Northeast is sitting in buyer's market territory with just over 4 months of supply and prices down 8% year over year. So even within the detached sector, location is really important. Now, apartments. This is where the real softness is. Sales dropped 27% year over year to just over 400 units. Inventory is around 1,900 units, up 3% from last year, and months of supply has climbed to 4.4 months of supply, firmly buyer's market territory. The benchmark price for apartments is $301,400, down nearly 9% year over year. If you're an apartment buyer, you have negotiating power right now. If you're an apartment seller, pricing has to be sharp and presentation has to be flawless. Now, townhouses and semi-detached or duplexes are sitting somewhere in the middle. Townhouse sales were up slightly. Semi-detached sales or duplexes were also up as well, but both are seeing months of supply imbalance to buyer favoring range. Prices are down 7% for townhouses and relatively flat for duplexes. So when we say a balanced market, what we really mean is it depends entirely on what you're selling and where it is. Much like Calgary's weather, your buying and selling environment may be completely different from one buyer and one seller to the next. Let me bring this to life with some real stories from April. Luxury is moving. I'm talking homes over 2.5 million, whether it's inner city, suburban, or even on the outskirts. If the home is exceptional and in a great location, there's demand. Wealth is relocating to Calgary. People are choosing this city for quality of life, business opportunity, and frankly, affordability compared to Toronto and Vancouver. That trend is still alive and well. Detached homes under $750,000 are hot if you price them right. I had listings in this range that moved fast this month. Multiple showings, strong interest, clean offers, but here's the key. Presentation mattered. Staged well, photos were dialed in, the home showed beautifully. Now let me tell you about a listing that didn't go that way. I met with a seller in Pump Hill, beautiful area, but he wanted a price that was about $300,000 higher than the market could support. Even with all the magic that I can work with staging, marketing, and strategy, I was honest. I told him what I could deliver and what I couldn't. He decided to go with another realtor who told him what he wanted to hear. That home is now sitting on the market while others in the same community priced accurately are now pending. Now, could I have started off with his price and adjusted later? Yes, I could have done that. But sometimes what people don't realize is when you're catching up to a market that might be quickly changing, you have to be very careful. That initial inaccurate price may taint your listing altogether, and trying to catch up later may result in an even lower price than the accurate price I gave from the very beginning, especially if you miss the prime selling window. I also had a listing in Altador that went under contract with 2 offers. We priced it based on the market, not on hope. We presented it beautifully, as we always do, and buyers responded. Ultimately, we got 2 offers, both with their own intricacies, which didn't lead to selling over asking, but a nearly $4 million home sold in 39 days, achieving the second highest price in the entire community ever, while the property that holds the highest price took almost a year to sell, with only a small difference in between them, and that highest price home had many price adjustments along the way. Here's the uncomfortable truth. The market rewards accuracy and punishes wishful thinking. If you overprice, you sit. If you underprepare, you lose money. And some of that comes down to circumstances. Maybe there's a tenant in the home. Maybe the seller's situation limits what can be done. I get it. But some of it, and I hate seeing this, is realtors not knowing better. I'm still seeing listings hit the market with toilet lids up in the photos at all price ranges, clutter everywhere, poor lighting. These are simple, free fixes that make a huge difference. You just have to be attentive to the details. Who you work with in this market matters. You're going to pay a commission no matter what. Make sure you're getting someone who's going to fight for the highest possible result. At Calgary's Finest, you'll find a team that includes a dedicated stager at Wow Effect. Light staging is included in all our listings, and the staging stays for a period of 1 month while we're on the market. You also get a team that backs me up, including marketing and assistance, so that your property, no matter what is going on, is constantly being advertised. We don't just list it, put it on MLS, and move on. We're constantly generating exposure to attract a buyer through methods such as SEO and AI searchability, blog creation, RE/MAX international campaigns, such as our recent big feature in RE/MAX Calgary's leader in luxury exposure, Globe and Mail campaigns, advertising, and more. If your home doesn't shine, buyers will move on to the next one. If this is the type of content you've been looking for, please show your support and don't forget to like, share, and subscribe. All right, now let's zoom out, because what's happening in Calgary real estate right now isn't happening in a vacuum. There are some big forces at play, and understanding them helps you make smarter decisions. In late February, conflict erupted in the Middle East and oil prices spiked. Benchmark oil prices, which had been trading around $64 per barrel earlier this year, jumped to over $93 per barrel in late April. That's a massive move. For Calgary, higher oil prices are generally good news. They boost government revenues, support our energy sector, and bring investment to the province. But here's the nuance. This isn't 2014. The energy sector has matured. Companies are disciplined. They're not rushing to ramp up capital spending the way that they used to. So yes, Higher oil prices help, but the trickle down to real estate isn't immediate or automatic. Also, consumers are feeling the pinch at the pump. Gasoline prices in Calgary jumped 21% in March alone. That hits all household budgets at a time when the cost of living is already a concern. The federal government rolled out a fuel tax relief program in late April, saving up to 10% per liter through Labor Day. And Alberta's provincial fuel tax relief could kick in on July 1st if prices stay elevated. These measures help, but they don't erase the pressure. Now let's talk about inflation and the Bank of Canada. Canada's inflation rate jumped to 2.4% in March, up from 1.8% in February, driven almost entirely by higher gas prices. The Bank of Canada released its monetary policy report on April 29th and held its policy rate at 2.25%. Governor Macklem was clear. They're looking through the immediate impact of higher energy prices, but they won't let it become persistent inflation. Translation, they're in a wait-and-see mode. If inflation stays elevated beyond a few months, they could raise rates. If it fades as oil prices erase, they hold steady. For Calgary real estate, that means mortgage rates are in a wait-and-see mode. If inflation remains persistent due to all this oil situation, then we may even see an increase in rates. If all that were to go away and the economy continues to prove sluggish, then perhaps we could see a small decrease. But at this point, it's looking like we'll probably stay status quo. Fixed rates actually trickled up about 30 basis points in mid-March as bond yields rose. To put this in perspective, that's roughly $100 more per month on a $600,000 mortgage. So for first-time buyers already stretching to qualify, that's often the difference between buying now and waiting. What about consumer confidence? Consumer confidence is fragile, but spending has been resilient. Here's an interesting contradiction. Canadians actually feel terrible about the economy. The Bank of Canada's consumer survey shows 18 consecutive quarters of net pessimism. People are anxious about their finances, job security, and the cost of living, and yet retail spending is holding up. In Alberta, retail sales grew 3% last year and are on track for 4% growth in 2026. Why? Well, these wealthier households are still spending. Tourism is booming, and some households are drawing on savings or credit to keep up. Speaking of tourism, Calgary just had a record year. In 2025, the city welcomed 10.5 million visitors, the highest total ever. Visitor spending hit $3.3 billion, up from $2.9 billion in 2024. Tourism is Calgary's #1 service export, and it's supporting over 84,000 jobs across the city. When people visit Calgary, they fall in love with it. And for many, that first visit plants a seed. Could I build a life here? That's part of why we're seeing so much inbound migration and investment. Now, I want to hear from you. Let me know in the comments, is this your story? Did a visit to Calgary prompt you to move here? Small business sentiment is cautiously optimistic. ATB Economics just released their inaugural Small Business Pulse report, and the takeaway is this: Alberta's small and medium enterprises are facing real challenges: rising costs, labor shortages in construction and hospitality, regulatory burdens, but they're resilient. The CFIB Business Barometer rose to 58.4% in April, which means that more businesses expect stronger performance than weaker performance. Alberta's unemployment rate has come down to 6.5% as of March, and while the labor market is still soft, it's not collapsing. Business owners are adapting. Trade uncertainty is still real. The Canada-US-Mexico agreement, CUSMA, is up for review this summer. While most analysts expect the status quo to hold, tariffs remain, but CUSMA exceptions shield most exports. The uncertainty alone tends to pause investment decisions. Combined with slower GDP growth and sticky inflation, the second half of 2026 is shaping up as a wait-and-see period. for a lot of buyers and businesses. So how do we tie all of this together? Here's my take. Alberta and Calgary specifically is still the strongest housing market in Canada. We have the fundamentals, job growth, population growth, relative affordability, and an energy sector that's providing a nominal boost even if the investment boom isn't what it used to be. Our months of supply at 2.84 is balanced. Compare that to BC at 7.8 months. That's buyer's market territory with prices down nearly 6% year over year. But within Calgary, you can't paint with a broad brush. Detached homes in strong areas with good pricing and presentation are moving. Apartments are soft, luxury is strong, entry level is competitive. Location matters, pricing matters, presentation matters. If you're thinking of selling a detached home, this is your window. Spring season peaks in May and June. By mid-July, activity slows. If you want maximum exposure and maximum competition amongst buyers, list now. But, and I can't stress this enough, price it right and present it well. This isn't a market where you can throw it up and hope for the best. Buyers have choices. If you're buying, you have leverage in some segments. Apartments, for example. If you're in the market for a condo, you've got negotiating power. Sellers are motivated, inventory is up, prices are down. Same goes for townhouses and some areas of the city where months of supply is higher. But if you're buying a detached home in a hot neighborhood, expect competition. Multiple offers are still happening on well-priced, well-presented properties. Interest rates aren't going to save you. The Bank of Canada doesn't look like it's going to be cutting rates anytime soon. If you've been waiting for a rate drop to make your move, that's probably not happening in 2026. So the question becomes, do you wait and hope, or do you act on what's in front of you today? On a personal note, you may have heard that RE/MAX is being acquired by Real Broker, a company that's only been around for less than 5 years. RE/MAX is a legacy brand, one that I've been a part of since I started my career in real estate, and one that I trusted long before I even got into real estate. It's bittersweet to see such an iconic name change hands, but I admire the leadership quality that it takes to recognize when it's time to let go and do what's best for the brand and its people. For you, buyers and sellers, clients, it's business as usual. For us realtors, it's a constant reminder that the only constant in life is change. And what matters most is how you adapt to it. I'm excited and intrigued about what the future holds. Speaking of adaptation and leadership, this month, our book club is reading Start With Yourself by Emma Grede. Emma is a British businesswoman and founding partner of Good American, the inclusive denim brand she co-founded with Khloe Kardashian. She's also the CEO of Safely and founding shareholder in Skims. Emma made history as the first Black female investor on Shark Tank and sits on the board of 15% Pledge. Her book is about the power of self-belief, building from the ground up and understanding that before you can lead a team, grow a business, or navigate a major life decision like buying or selling a home, you have to bet on yourself first. It's a book about doing the internal work so the external results follow. As always, the invite is open for our monthly book club and leadership mastermind. Whether you've read the book or you're just interested in the conversation, you're welcome to join us. It's absolutely complimentary, happens on the last Wednesday of the month over the noon hour. This month, that's May 27th, and it's all virtual. It's one of my favorite hours of the month, and I'd love to have you there. So here's the story of April 2026. The market is still moving, but it's doing so unevenly. Luxury is strong, entry-level detached is competitive, detached overall is holding up. Apartments are soft, pricing and presentation are non-negotiable. And big forces, oil prices, inflation, interest rates, trade uncertainty are all shaping up buyer and selling behavior in real time. If you've been thinking about making a move, now is the time to have the conversation. Whether you're buying, selling, or just curious about what your home is worth in today's market, let's talk. I'm here to help you make the smartest decision for your situation. Thanks for watching, and I'll see you next month with the May update.